Hello everyone. I am Neha Jolly. I welcome you all to the fifth session of Coherent Talks. Many people were asking me about what is Coherent Talks. So, friends, Coherent Talks is a series of knowledge sharing sessions organized by Coherent advisors, and this is the fifth session in this series. Initially, three sessions were done in the closed circle, and since the last session, we have opened up these sessions on live streaming through YouTube. Our today's topic for this session is taxation of NFTs, cryptos and other virtual digital assets. now मैं आपको थोड़ा सा ब्रीफ करती हूँ कि क्रिप्टो करेंसी है क्या। क्रिप्टो करेंसी एक डिसेंट्रलाइज करेंसी है जिसका कंट्रोल किसी भी अथॉरिटी या गवर्नमेंट के पास नहीं है, जिसके ऊपर किसी का कोई कंट्रोल नहीं है। ये प्योरली डिसेंट्रलाइज करेंसी है एंड ये एक फ्यूचर करेंसी है। ये पीयर टू पीयर नेटवर्क है। इसका कंट्रोल सबके पास इसका कंट्रोल है। और इसके पीछे जो टेक्नोलॉजी यूज हो रही है वो ब्लॉकचेन है। ब्लॉकचेन इज अ फ्यूचर करेंसी। एंड जो टेक इंटरेस्टेड लोग हैं या जो भी यूथ है जिसको ब्लॉकचेन टेक्नोलॉजी के बारे में समझ है, उसको क्रिप्टो करेंसीज में बहुत उसका जो इंटरेस्ट लेवल है वो बहुत ज़्यादा हाई है। सो इट इज़ बेसिकली अ फ्यूचर करेंसी। एंड जितना भी इसलिए आज की डेट में क्रिप्टो करेंसीज जो हैं वो बहुत पॉपुलर हो रही हैं। नाउ अब हम बात करते हैं कि यूनियन बजट में इसके बारे में क्या क्या बातें की गई हैं या इससे रिलेटेड क्या क्या प्रोविजंस बताए गए हैं। अगर हम यूनियन बजट 2022 की बात करें तो वर्चुअल डिजिटल एसेट्स को जो है वो प्रॉपरली मेंशन किया गया है। अगर हम कुछ साल पीछे जाएं तो बहुत सारी गवर्नमेंट्स जो हैं वो क्रिप्टो करेंसीज को एक्सेप्ट नहीं कर रही थी, लेकिन आज की डेट में काफ़ी सारी गवर्नमेंट्स इसको एक्सेप्ट कर रही हैं। इसकी पॉपुलैरिटी को देखते हुए जो वो जो है जो गवर्नमेंट्स जो हैं वो कोशिश कर रही हैं कि वो कुछ गाइडलाइंस बनाएं इसके अराउंड। एंड जैसा कि हमारे बजट में भी इसके अराउंड टैक्सेशन रिलेटेड गाइडलाइंस बनाई हैं। सो उसी उन इन्हीं सब चीज़ों को डिस्कस करने के लिए वी हैव विद अस आवर स्पीकर टुडे, मिस्टर तरुण कुमार। ही इज़ अ चार्टर्ड अकाउंटेंट बाय प्रोफेशन. He is also a diploma holder in international taxation. He has authored many books and blogs related to income tax matters. He leads direct tax division of the Coherent advisors. He looks after the direct tax related matters, regulatory and compliance services, tax litigation also. So I welcome you, Tarun, on our fifth session today. But before handing the session over to Tarun, I request you friends to make this session as interactive as possible. Do write your queries in the chat box. I'll ask those queries with our expert speaker during the session or at the end of the session. Now I request Tarun to please take over this forward.
Thank you, Neha, for such a warm introduction and nice words. Good morning, everyone. Namaskar. Friends, we are living in the world of the internet and technology. And in the last couple of years, we have seen our societies changing, and the way computers and the internet and artificial intelligence have changed the way we live, work, and communicate with each other. We have seen a rise in the usage of cryptocurrency, and sooner or later we'll see the word economy would inevitably shift to a digital ecosystem. Everything is becoming paperless, from our income tax return filing to the assessments, and like trading in a digital currency, money currency, everything is becoming a digital. And in the Union Budget 22-23, the Honorable Finance Minister, Shrimati Nirmala Sitharaman, introduced a most awaited scheme for the taxation of virtual digital assets. While introducing the taxation scheme, the Finance Minister, in her budget speech, acknowledged the fact that there has been a phenomenal increase in the transaction in virtual digital assets, and the magnitude and frequency of these transactions have made it imperative to provide for a specific tax regime. We have heard a lot about Bitcoin, cryptocurrency, blockchain, as Neha was telling about, and today I'm not going to discuss about what exactly these things are, today going to discuss the scheme of taxation of these assets. And if I just give you a brief of, so this is basically a electronic cash that would allow online payments from one party to another without going through a financial institution. This is a currency of the internet, and the concept of Bitcoin was introduced somewhere in 2008. And crypto asset is commonly used to refer to types of digital financial assets. Those are based on the DLT, that is distributed ledger technology. So these currencies are not similar to fiat currency, which is an official and sovereign currency used in the legal tender. And if we go through the budget speech of Madam Finance Minister and in the Union Budget 22, she also introduced the concept of CBDC, that is Central Bank Digital Currency, which would be backed by public authorities and uh, will be issued by the Reserve Bank of India. Now I'll share my screen and PPT to run through the provisions of taxation of virtual digital assets. Neha, if you can confirm if the screen is visible.
Yeah, yes, screen is visible then.
Thank you. So, friends, as we discussed today, going through the discussion of taxation of cryptos, NFTs, and other virtual digital assets. So, I'm not going to what exactly is the cryptos or NFTs or and virtual digital asset. Basically, I'll cover the scheme of taxation of these assets. कि income tax में इनका taxation किस तरह से होता है, that part I'll cover upon. So first we need to understand the definition of virtual digital asset. So just I'll give you a brief background कि इसकी scheme of taxation किस तरह से है. पहले we need to understand the definition of virtual digital asset कि virtual digital asset होता क्या है. Second, they have introduced a section 115 BBH which governs the provisions for the taxation of VDA. Then they have introduced a provision for the TDS on the deduction, TDS for the deduction on payment made to the transferor. And last, they have introduced the concept if VDA is transferred for an inadequate consideration. First, I'll go through the definition of VDA. So the definition of VDA has been introduced in the clause 47A of section 2 of the Income Tax Act. So basically three things are covered there. First one is information or code or number or token generated through cryptographic means. So virtual digital asset की definition का first element है information, code or number or token generated through cryptographic means. Now what is cryptographic means? So basically cryptography is a science by which anything is encrypted. It is basically
Tarun,
storage of a data.
I'll interrupt you in
Yes.
between. The slide is not showing on the screen, which you are discussing about.
Is it visible now? I've actually changed the slide.
No, the slide is still first slide it is showing.
I'll share my screen again.
Yeah, sure.
हेलो। या तरुण, आप स्क्रीन शेयर कर रहे हैं?
हाँ, मैंने अपलोड किया है दोबारा से ना पीपीटी यहाँ पे फॉर अ स्लाइड शो। जस्ट 1 minute. Is it visible now?
Yeah, this is visible now.
Yes. So we were discussing the definition of virtual digital asset. So there are basically three elements in the definition of virtual digital asset. The first one is information or code or number or token generated through cryptographic means. So what exactly is the cryptographic means? So cryptographics is basically a science of protecting information by transferring it into a secure format, and this process is called encryption. So that is a cryptographic means through which any information or code or number or token is generated. So first element of virtual digital asset is that. Second one is NFT, that is non-fungible token. So what exactly is the non-fungible token? A non-fungible token can be created for an image, video, or audio, and they are generally created from the field of art, sports, entertainment, gaming, and collectibles. So as of now, the scheme of taxation is concerned, all NFTs will not be considered as a virtual digital assets. Only the NFTs which will be notified by the government, those will be considered as a virtual digital asset. And the last part of our definition of virtual digital asset is any other digital asset which will be notified by the central government. So this is basically a residuary clause under which government can notify any asset as a virtual digital asset. So virtual digital asset will be anything which falls into the any of these three criteria that will be considered as a virtual digital asset. So what they have excluded from the definition of virtual digital asset is Indian currency, CBDC, that is central bank digital currency, which is yet to be issued by the Reserve Bank of India, and foreign currency. So Indian currency like our INR, that will not become an virtual digital asset. And now what is Indian currency? Indian currency is defined under the Foreign Exchange Management Act 99. So basically these are the bank notes which are issued by the Reserve Bank of India, and it covers the digital currency which is yet to be issued by the Reserve Bank of India. And what is foreign currency? Foreign currency is what is not Indian currency, that will be called as a foreign currency. So these all specifically has been excluded from the definition of virtual digital asset, so as not to tax these things under the current scheme of taxation. So this is basically the definition of virtual digital asset. Reason being is it is important to understand this definition is because anything which will be taxed under the new scheme of taxation, that has first to be classified as a virtual digital asset. Only then it can be taxed under the current scheme of taxation. If something is not classifiable as a virtual digital asset, then it can't be taxed as a new scheme of taxation. So this was about the definition of virtual digital asset. If you have any questions to ask on the virtual digital asset, we can take up those questions. Else I'll move to the next part of my presentation.
Yeah, Tarun, there is one question coming in my mind that you have mentioned any other digital asset notified by central government. So is Bitcoin a virtual digital asset or not?
So Bitcoin is very well falls into the definition of virtual digital asset. So basically, Bitcoin is a token which is generated through a cryptographic means, which falls into the first limb of the definition of virtual digital asset. So Bitcoin will be considered as a virtual digital asset, and any transfer of virtual digital asset will be taxable under the current scheme of taxation.
Okay.
Shall we move ahead?
Yeah, please move ahead.
So one thing I would like to add on here is there is a misconception or a question going around the through media houses. There are that Bitcoin has been notified as official currency of some countries. So whether it will fall under the exclusion, so that question might have come from there. So since we have specifically mentioned that foreign currency will be excluded from the definition of virtual digital asset, so there is a country called EI Salvador. that has notified Bitcoin as its official currency. So whether it will be excluded from the definition of virtual digital asset and not be taxed under the current scheme of taxation? The answer is no. It will not be excluded from the definition of virtual digital asset. The reason is that what is the definition of foreign currency that we need to understand? The foreign currency is something which is not Indian currency, and Indian currency is defined under the Foreign Exchange Management Act. So once we go through that definition, so Indian currencies are basically banknotes which are issued by the Reserve Bank of India. So foreign currency should be something which should be fiat currency of some other country. So that should only be excluded from the definition of virtual digital asset. And Bitcoin being notified as the official currency of EI Salvador does not make it as exclusion from the definition of virtual digital asset. And any transfer of this will be taxable in the hands of a transferor.
So here's one more question, Tarun, coming in my mind is that this is a very common question in people, that is this cryptocurrency legalized in India or not? Since government has introduced taxation guidelines also on this, so is this considered as legal? Many people are talking about that this becomes legal, this is legalized now. So we want the view of yours on it.
So, Neha, here we need to understand one thing: the taxation and legality, these both concepts are completely different. So, what is to be taxed? That needs to be understood. So, under the income tax law, the income earned is taxed. So, first we need to understood whether it is an income or not. We need not to check whether this income is legal or illegal. Even the illegal income is taxed under the tax laws. So that needs to be understood first. Even the Supreme Court, in a landmark ruling, has laid down this principle that even the illegal income has to be taxed. So that is something separate concept whether the crypto is legal or illegal. The only thing is, if it is income, that has to be taxed. And now coming to the legality part of the crypto. So as of now, the stand of government is not clear whether the crypto is legal or illegal. The reason being, since the launch of this digital currency, the Reserve Bank of India has issued many circulars which are in the nature, which have put up they are like a red flags for the investors to not to use the cryptocurrencies. The reason is that it is not backed by any asset. It is basically a storage of data. So since cryptos are not backed by any asset, so it is a advisory by the Reserve Bank of India to not to invest in these currencies. And even in the last session of the parliament, we have seen that government was planning to introduce a bill to ban the cryptocurrency, and that bill was not introduced. Instead, they have regulated the taxation of cryptos. So the stand of government is yet not clear whether they will consider crypto as legal or illegal. But under the tax laws, this income has to be taxed. Since the illegal income is also taxable, the legitimacy of the income is not to be seen for the taxation purposes. Since we are discussing the taxation part, so I'll not go through whether what will be the stand of the government. The only consideration is, even you are earning legal or illegal income, that needs to be taxed under the tax laws.
Okay, thank you, Tarun, for this clarification.
Friends, now going to the scheme of taxation, which is applicable from the 1st of April 22. We have discussed what is the definition of virtual digital asset. If anything is classified as a virtual digital asset, then this has to be taxed under the scheme of taxation from the 1st of April 22. So they have introduced a new section, 115 BBH. This section provides the tax rate and the manner in which the income from the transfer of VDA shall be computed. So basically, this section is of the tax rate, at which rate the VDA shall be taxed, and manner in which the computation of taxable income has to be made. That is the thing to be checked here under this section. So this section provides that income from VDA shall be taxable under this section only if it arises on the transfer of VDA. So the first element here is the transfer of VDA. So any income under this section only can be taxed if it arises on the transfer of VDA. So we need to check whether there is a transfer of VDA or not. If there is a transfer, then this income arising on the transfer shall be taxable under this section 115 BBH, else it will not be taxable under this section. So now we need to understand what is the meaning of transfer. So transfer has been defined under clause 47 of section 2 of the Income Tax Act. So this definition is possibly covers all the scenarios, whatever comes to our mind of the transfer. It covers transfer can be by way of sale, it can be by way of exchange, it can be by way of relinquishment, it can be by way of extinguishment of rights, it can be by way of compulsory acquisition, or it can be by way of conversion of into stock in trade. So whatever possible thing you can ask whether it will fall in the definition of transfer, that is being covered here. So if I sell any if I make a sale of any Bitcoin or Ethereum or any other cryptocurrency or any other token or any notified NFT or other virtual digital asset, so that will fall into the definition of transfer, and income arising on that transfer will be taxable under section 115 BBH. And second element is exchange. To take an example, if I have Bitcoin, which is currently valued at 27 lakh rupees. So today's value of Bitcoin is 27 lakh. And Neha is holding an Ethereum, which is valued at 2 lakh. And I exchange my Bitcoin with Ethereum. And that will even considered as a transfer. So any income arising on account of that transfer will be taxable under section 115 BBH. So whatever you can think upon whether it will be considered as transfer or not, that is covered under the this definition under section 247. So there is a question from Shubham: how will department track any transfer? So I can read that question: how will department track any transfer? So currently, even if I say before 31st March 22, there was no mechanism to track how it will be transferred, since there is no reporting by any portal or any exchanges or any, I would say, platforms through which a transfer is made. There was no reporting mechanism through which income tax department will get that information whether this will be whether anyone has transferred that crypto or not. But currently they have introduced a new section 194S for TDS. So on any transfer, TDS has to be deducted. If any TDS is deducted, for example, Shubham, I have transferred you a Bitcoin and you have purchased that Bitcoin for rupees 27 lakh, you need to deduct a TDS under section 194S. Since you will deduct a TDS, that will reflect in my 26S. So in a way, income tax department will get a data that Tarun has transferred a Bitcoin to Shubham Jain, and Tarun has to report that in his income tax return, and that has to be offered to tax under section 115 BBH. So that's how income tax department will get data. And other than that, I'll say that regulatory authorities and vigilance authorities of India, after the Bitcoin, since they have information from various authorities that these currencies and Bitcoins are used for illegal activities. Even we have seen many cases where websites are hacked and the ransom money is asked in the form of Bitcoins. So anyhow, the government agencies are after the cryptocurrency and Bitcoins. So it is always advisable that taxpayer should report this income in their income tax return. If this income is not reported, even the that will raise you a penalty for the concealment of income. So I think we all should be an honest taxpayer, and the income should be reported in our return of income. Now coming to how the income from the transfer is to be computed. So the income arising from the transfer of virtual digital assets shall be computed by reducing the cost of acquisition from the full value of consideration. So the computation mechanism has two elements. The cost of acquisition has to be reduced from the full value of consideration. So we need to understand what is full value of consideration, and the second element is cost of acquisition. So if you reduce the cost of acquisition from full value of consideration, you will get a income which is to be offered to tax under section 115 BBH. Now coming to what is full value of consideration and cost of acquisition. The term full value of consideration is not defined anywhere in the tax laws. So under Income Tax Act, we don't have any definition of full value of consideration. So it has to be understood in a general parlance, what will be the full value of consideration. So full value of consideration is basically the amount which we will receive on the transfer. That will be considered as a full value of consideration. So there is no specific meaning which is attached to the full value of consideration. Now coming to the cost of acquisition. So cost of acquisition will be the amount which I would have paid to acquire that virtual digital asset. That will be considered as the cost of acquisition. To take an example, I have bought an NFT for rupees 100 and I have sold that NFT at 200 rupees. So 200 it will be the full value of consideration, 100 will be the cost of acquisition, and my taxable income will be rupees 100. Deduction of other expenditure. The law is very clear. It states that no deduction in respect of any expenditure other than the cost of acquisition or allowance or set off of any loss shall be allowed in computing such income. So let's take an example. If I have incurred any expenditures in relation to transfer, that will not be deducted while computing my taxable income. Only the cost of acquisition has to be deducted from the full value of consideration while computing the taxable income. Like in the capital gains, while we compute the taxable income, we deduct cost of acquisition, we deduct the cost of improvement, we deduct the expenditure in relation to transfer, we do the indexation of that amount. So that is only for computing the income under the head capital gains. But while computing the income under 115 BBH, these expenditure will not be deducted. Only the cost of acquisition is allowed as deduction. The second important element here is no set of any loss shall be allowed in computing that income. For example, I have purchased a cryptocurrency at rupees 500 rupees and I have sold it at 100 rupees. So 400 is my loss. So that loss will not be allowed to be carry forward. Neither that loss will be allowed for set off against any other income. Now one common question which comes to the mind of people. For example, I have sold two VDAs in a same year. I have sold one NFT wherein I have earned an income of rupees 1000. I have sold a crypto wherein I have incurred a loss of rupees 500. So whether that loss of 500 can be set off against that income of 1000, the answer is no. The law is very clear. There will not be set off of any loss while computing such income. So you can't set off or carry forward any loss arising out of this income. Now coming to the rate of tax on income. So the income arising from the transfer of virtual digital assets shall be taxed at the rate of 30% plus surcharge, which shall be the rate which will be applicable in the case of assessee, and cess 4%. And this rate is notwithstanding anything contained in any other provision of act. So the rate is flat 30% plus surcharge plus cess. So your income will be taxable at the rate of 30%. You will not get benefit of any special rate or any other beneficial rate. Now the question here arises whether the benefit of maximum exemption limit will be allowed. We have seen in the case of individuals, there is a slab based taxation system. Like up to 2,50,000, there is nil rate of tax. From 250 to 5, there is 5%, 5 to 10, 20, and above 10, that is 30%. And under new regime, there are 7 slabs under which the individual is taxed. Now the question comes, the income is taxable at the rate of 30%. Whether an individual can claim the benefit of maximum exemption limit, that is 2,50,000. To my mind, the answer is no. The reason here is under 115 BBH, they have not provided specifically that any individual will be able to claim the benefit of maximum exemption limit. Like while we earn a short-term capital gain on the sale of shares, they have specifically mentioned that individual resident assessee can claim the benefit of exemption limit. But under 115 BBH, there is no specific benefit which has been provided. So your income will be taxable at flat 30% plus surcharge plus cess, and you will not be able to claim the benefit of maximum exemption limit. Now coming to next key issue which arises, whether the benefit of rebate under section 87A be allowed. Now we need to understand what is rebate under section 87A. सो अगर किसी टैक्स पेयर की इनकम 5 लाख रुपए तक है तो उसको 12,500 रुपीज की रिबेट मिलती है। यहाँ पे एक मिसकंसेप्शन के लोग के माइंड में ये भी है कि अगर आपकी 5 लाख तक की इनकम पे कोई टैक्स ही नहीं है, बट ऐसा नहीं है। अगर आपका टैक्स अमाउंट 12,500 तक है, यू कैन क्लेम द रिबेट अंडर सेक्शन 87A। जैसे ही आपका टैक्स अमाउंट 12,500 से इंक्रीज करता है, यू नीड टू पे द एंटायर टैक्स, यू विल नॉट बी एलिजिबल फॉर अ रिबेट अंडर सेक्शन 87A। And rebate is not provided from tax rate, it is provided from a tax amount. So again, since the tax will be computed at 30%, so agar aapka tax amount is lesser than 12,500 and your taxable income is less than 5 lakh, to my mind you will be eligible to claim the rebate under section 87A. So there is no bar wherein which restricts you to claim the benefit of rebate under section 87A. Next question arises whether the deduction under chapter 6A be allowed. So what are chapter 6A deduction, which are very common and popular among the taxpayer? The deduction under section 80 like people invest into the life insurance and PPF, EPF, 5-year tax saver FDT, fixed deposit, 3 years equity linked mutual funds. So these are all 80C deductions. Then 80D health insurance mediclaim. So again, through this income you will not be able to claim any deduction under chapter 6A. That income will be taxable flat at the rate of 30%. Now this is very important question: under which head of income VDA shall be taxed? So how the scheme of taxation under income tax work? There is a section 14 which provides that your income will be computed under 5 heads of income, which is income from salary, income from house property, income from a business and profession, income from capital gains, and there is a residuary clause, income from other sources. So there are 5 heads of income under which we compute income, then it is aggregated, and then there are provisions of set of carry forward deductions, and then taxable income is computed. Now they have introduced a special section 115 BBH which provides for the manner of computation and rate of tax. But this provides only for the manner of computation. But we need to check under which head of income this falls, whether it will fall under capital gains, business and profession, or other sources. Obviously, it will not fall under the head salary or house property. So it can fall only under the business and profession, capital gains, or other sources. Now, under which head it will be taxable, it is important to see. So we need to check whether the virtual digital asset has been held as a stock in trade of the taxpayer, or it is held as a capital asset, since that will be important criteria to determine whether this income will be taxed under the business or profession or the capital gains. The reason is, if a person is a trader, which is a regular trader into the Bitcoin or a crypto, then this income will be taxable under the business and profession. If a person is holding it as its investment or a long-term investment, then it will be taxable as under the head capital gains, or else it will fall into the residuary clause, wherein any other income which is not taxable under the other 4 heads, that will be taxable under the head other sources. Now, why I'm telling you this, since similar issue arises in the case of shares and securities, wherein there is a much litigation whether it will fall under the head business or profession or capital gains. So here it will not be a reason of litigation, because the rate of tax is flat. Whether it is taxable under the business profession or a capital gain, it will get taxed at a flat rate of 30%. And the issue will not arise because you will not get deduction of any expenditure. The computation mechanism has been provided under this section. You will only deduct the cost of acquisition from the full value of consideration, and you will pay a tax at the rate of 30%, be it taxable under the head PGBP or a capital gains or other sources. So there will not be litigation. But while classifying this income under the PGBP or capital gains, you may refer the instructions of CBDT, which are issued in the context of shares and securities, wherein they have led the principles that how the income has to be classified under the business head or capital gains. So in those instructions, which is issued in the 2016 and 2017, they have laid down the series of principles that how this income has to be classified, wherein they have stated that we need to check the intention, that whether the intent is to hold it as a long term, as an investment, or the intent is to hold as a uh, trading asset. If it is held as a trading asset and there is a much frequency under which it is transferred, so that will be taxable under the head business and profession. Otherwise it will be taxable under the head capital gains. Now the question arises, if I have classified this income under the head capital gains, so whether I'll be able to claim the benefit of cost of improvement, indexation, or exemptions under section 54, 54F, whether these exemptions are allowed. Or if I have claimed it as a business income, can I claim a depreciation on this asset or any other expenses? The answer is no. The law is very clear. The income has to be computed under 115 BBH. You may classify it under the head PGBP, capital gains, or other sources as per the principles which we just discussed. But you will not be allowed deduction of any expenditure. The computation has to be made by reducing cost of acquisition from full value of consideration, and the income has to be offered to tax at the rate of 30% without any benefit of maximum exemption limit. So you will not be allowed the benefit of any expenses. If we have any questions, we can discuss, as else I'll brief upon the what shall be the treatment. Since this scheme of taxation is applicable from 1st of April 22, we'll just briefly touch upon how this income will be taxed if it was transferred before 31st March. If in between we have any questions, I can take those up.
Yeah, Tarun, I have a question in my mind that what is the difference between the transfer of virtual assets and sale of those assets? As personally, I am holding some cryptos, so I am trying to understand when those would be taxed at 30% rate.
Okay. So Neha, congratulations if you are holding any crypto. The reason is the price of Bitcoin is 27 lakh. Around 2017, it was just 1 lakh. So there is a 27 times jump in the price of Bitcoin. So the question you have asked is that whether it will be a tax arises on the sale or transfer. So the
Yeah,
section 115 BBH provides that any tax has to be paid on the income rising on the transfer of virtual digital asset. So if you make any transfer, the tax has to be paid on that transfer. Now the you have asked second element is sale. So we need to see that transfer is defined under section 247, that is clause 47 of section 2. So which includes in its ambit sale. So sale is a part of transfer. Transfer is a very broader term which includes sale it's in it. So if you have made a sale or we say transfer, so tax has to be paid on that transfer.
okay. Thank you, Tarun. I think you can move ahead with the next question.
So what shall be the treatment if VDA is transferred up to 31st March 22? So this scheme of section 115 BBH and definition of VDA, which has been introduced under the Income Tax Act, they are applicable from the 1st of April 22. So if you have made any transfer before 31st March 22, that has to be taxed under the normal provisions of tax. Then you need to check whether this has to be classified under the PGBP, capital gains, or other sources. So generally under other sources, the deduction of expenditures is not allowed. If you are holding it as a trader, you can claim you can prepare your profit and loss account where you report the sales consideration received on the VDAs, and you can claim the purchase value and other expenses which are relating to your business. The revenue expenditures you can claim, the depreciation of assets you can claim. So under the normal provisions, the income is to be computed. If you are reporting it under capital gains, then the computation mechanism. Uh, yes, so Nitish has asked this same question. Since new taxation scheme is with effect from 1st April, by how the taxation provision will apply for any transfer of asset occur in between 21 to. So that's what Nitish we are discussing. So you need to check that income is to be computed under normal provisions. There was no special section, there was no special rate of taxation, there was no definition of virtual digital asset before the 1st of April 22. So it has to be seen whether it is a capital asset. If it is a capital asset, you need to compute under the income under the head capital gains. If it is a business income, then you need to compute how the business income is computed. Like you need to prepare your profit and loss account, you need to report your sales and claim all the expenditure, you need to pay tax on the net profit element, and the rate of tax shall be the rate of tax which is applicable in the case of assessee. That needs to be seen. So the normal provisions of tax will apply. The special provisions which are introduced and under this new scheme shall not be applicable in this case.
Tarun, we have a next question from another viewer, that what about marginal relief? Niharika Agarwal
So
is asking, what about marginal relief?
So marginal relief is something different. So it is not related to the rate of tax. That is when your income increases a certain limit, wherein your amount of tax becomes more than the amount of surcharge which is levied on you. So definitely, Niharika, you can claim the marginal relief if your slab change under the applicable surcharge rate. So now coming to the next part of my presentation, if there is a transfer without inadequate consideration. So as of now, we have discussed that tax has to be levied if VDA is transferred by any person. So if a person has transferred that without inadequate consideration, or I must say as a gift. For example, Neha has said she is holding a cryptocurrency or a Bitcoin. If she gifts it to me, then how it will be taxed? What will be the tax implication in the hands of Tarun and Neha? So in the hands of transferor, there will be no impact since Neha has transferred. So no tax is to be levied in the hands of Neha. So as a transferee, the income will be taxable in the hands of recipient as income from other sources. Since this is just like a gift, how the provisions of gifts are applicable, these provisions will be applicable on the transfer of virtual digital asset. So this shall be taxed under section 56 to X. So, how the taxability will arise in the hands of transferee if a person receives a VDA without consideration or for inadequate consideration, and the value of such benefit exceeds rupees 50,000, it shall be taxable in the hands of recipient under section 56 as income from other sources. The important point here is that the value of gift shall exceed rupees 50,000, only then it will be taxable in the hands of transferee, else it won't be taxable.
Tarun, here's another question coming from Niharika. She's asking
I'll,
before 31st
I'll take
March.
up. I'll take up these
Okay,
questions
okay,
towards end since these are more related to the current topic which I'm discussing.
okay, okay, sure.
So, since we are discussing the taxability of gifts, if anyone has made a gift, it will be taxable in the hands of transferee as income from other sources. So there are provisions wherein the gifts are exempt, like it is received on the occasion of marriage of the individual. If anyone is getting married and we have given him a gift on its marriage, then that will not be taxable, whether it is received from a close relative or not. The gifts received on the occasion of marriage are exempt. If a gift received under will or inheritance, it will be exempt. If gift is received in contemplation of death of the payer or donor, then it will be exempt. If it is received from a specified relative, there is a list of relative under section 56 from which the gifts received are considered as exempt. In that case, even it will not be taxable. Now, the question arises, if any person has received a gift, whether this income will be taxable at 30% in the hands of transferee under section 115 BBH? The answer is no. The reason is 115 BBH applies on the transfer of VDA in the hands of transferor. Now we are discussing the taxability in the hands of transferee, not the transferor. 115 BBH is applicable for the transferor, not the transferee. So the rate of 30% shall not be applicable. If a person has received a gift, it shall be taxable as per the normal tax rates which are applicable to a assessee. If he is an individual, he shall be able to offer it to tax under the slab rate of taxation. Now coming to the TDS deduction under section 194S. So, as Shubham has raised question in the initial part, how the income tax department will track these transactions. So, they have introduced a TDS provision under section 194S, which is applicable from 1st of July 22. So, if any person has paid any sum by way of a consideration for the transfer of a VDA, then consideration paid or payable to any resident person, on that amount the payee has to deduct the TDS. So what shall be the rate of TDS? The TDS has to be deducted at the 1% of the consideration amount, and it has to be deducted at the time of payment by any mode or at the time of credit of such sum to the account of the resident, whichever is earlier. Now the question arises, this TDS provision is applicable if payment is made to the resident. What if the payment is made to a non-resident? Whether the TDS has to be will be deducted under section 194S or no? The answer is no. TDS will not be deducted under 194S. The provisions of section 195 might have applicability, but the provisions of 194S shall not apply. Now, what
Tarun,
is threshold limit?
yeah, Tarun, I want to ask one question related to TDS. That is there any specific amount mentioned for deducting 1% of TDS, or it's on all consideration?
So that's what I'm coming upon, a threshold limit for deduction of TDS. So there is a threshold limit. If the payment is exceeds rupees 10,000 in a financial year, then on that amount the TDS has to be deducted. But for a specified persons, this limit is 50,000. General limit is 10,000. For a specified persons, this limit is 50,000. And who are those specified person? First is individual or HUF. If its sales from business does not exceed 1 crore, or in case of a profession it does not exceed 50 lakh in a preceding financial year, then the TDS has to be deducted if the value exceeds 50,000. And second category is individual or HUF who does not have any income from PGBP. So they have to deduct TDS only if the limit exceeds 50,000. In other cases, TDS is to be deducted if the amount exceeds 10,000. We have discussed the two limits, 10,000 and 50,000. Generally, we have seen for the purpose of deduction of TDS, you must have a TAN number, that is tax deduction and account number. So you need to obtain the TAN number, deduct TDS, deposit TDS, and then need to file your TDS return. But the specified persons which we have discussed for which the limit of 50,000 is applicable, they are not required to obtain the TAN number. They can quote their PAN number while making the payment of TDS and filing their TDS statement. So this was about today's session. Now we can take up if we have any queries.
Yeah, we can take up the queries of our viewers. First is of Niharika, that she was asking, before 31st March 2022, can you explain via example how shall we go for calculation whether CG or PGBP?
निहारिका, यहाँ पे आपको एक चीज समझनी होगी कि the government has introduced 115 BBH from 1st of April 22. वहां पे भी आपको क्लासिफाई तो करना ही है कि आपकी इनकम किस हेड में टैक्सेबल होगी, बिकॉज इनकम हैज टू बी टैक्स्ड अंडर वन ऑफ द हेड ऑफ इनकम. आपको 5 में से किसी एक हेड में जाना पड़ेगा, सैलरी, हाउस प्रॉपर्टी, कैपिटल गेन्स, पीजीबीपी, अदर सोर्सेज. जब आप किसी एक हेड में फॉल करोगे तो हर एक हेड के अपने एक कंप्यूटेशन के प्रिंसिपल्स हैं कि किस तरह से इनकम फ्रॉम सैलरी कंप्यूट होती है, किस तरह से इनकम फ्रॉम कैपिटल गेन्स कंप्यूट होती है, किस तरह से पीजीबीपी इनकम कंप्यूट होती है. तो उसी नॉर्मल प्रोविजंस के अकॉर्डिंग आपको इनकम कंप्यूट करनी है अगर आपने ट्रांसफर करा है 31 मार्च 22 से पहले. अगर आपने उसके बाद करा है उसके लिए उन्होंने बता दिया है कि किस तरह से कंप्यूटेशन करनी है, बट उससे पहले करा है तो आपके पास हर एक हेड ऑफ इनकम के अपने स्पेशल प्रोविजंस है जिसके अंदर आपको इनकम कंप्यूट करनी है. आपके पास टैक्स के रेट्स हैं, हर एसएससी के अलग अलग, इंडिविजुअल के लिए अलग हैं, फर्म के लिए अलग है, कंपनी के लिए अलग हैं. उन रेट्स के ऊपर आपको टैक्स देना है. तो वहां पे आपके नॉर्मल प्रिंसिपल्स लगने हैं टैक्सेशन के. ये स्पेशल प्रोविजंस आपके 115 बीबीएच, 194S ये सब अप्लाई नहीं होंगे.
Next question is of Nitish. How to classify holdings of digital currency PGBP, capital gains or other sources? Since for equities transfer, income tax has clarified rules such as dividend income, or classification is as per taxpayer.
So Nitish, there are no clear guidelines which are issued by CBDT as of now that how the income has to be classified and under which head this income has to be classified. Since there are similar provisions which are available with us in respect of shares and securities, wherein the CBDT has issued the circular that you need to see the intention of the taxpayer, whether he is holding his assets as a trading asset or a capital asset. That intention of taxpayer, that purpose for which he is holding, that needs to be seen. If this falls on the similar principle, unless until the any other guidelines are issued by CBDT, we can borrow the same principles for respect of virtual digital asset, since shares and securities are also asset and virtual digital is also an asset, since it is a capital asset. So you need to see, you can apply the similar principle for the classification. Until we can see in the future the CBDT might come up with certain guidelines under which head this has to be offered for taxation. Until then, we can borrow the same principles which are applicable in the case of shares and securities.
Next is question again from Niharika that 50,000 limit in case of gifts will apply.
Yes, Niharika, if any person has transferred a VDA for inadequate consideration or as a gift, the limit of 56(2)(x) shall apply, which is 50,000. That will be applicable.
And next is again from Niharika, virtual digital assets to classify in which head?
I think I have already answered this question. So again, there are three possible heads. That is business and profession, capital gains, and other sources. Under any of this head, you can classify. Now I'll just clarify one more point. It cannot be classified under salary or house property. There are three possible heads, that is business and profession, capital gains, and other sources, under which this can be classified. All right. So it will not make much of difference. The reason is the computation has to be made as prescribed under 115 BBH by reducing the cost of acquisition from full value of consideration. The tax has to be paid at 30%. So it will not matter much that under which head you will offer to tax this income. The only difference that will arise is the interest under section 234C. Since 234C levies the interest for default in payment of advance tax, but there is a special relaxation for income arising under the head capital gains, wherein if an individual taxpayer or any taxpayer is not able to determine his capital gains, then he needs to capture that transaction in the next installment of advance tax, which relief is not available in the case of business and profession and other sources. Only for that purpose, to that extent, that will matter. Otherwise, that will not matter whether you offer to tax it as business income or capital gains or other sources.
So I think the question of our viewers are completed. But one last question of mine is, Tarun, from you, that if a person is holding cryptos in his wallet and which are held outside India, so will it be taxed or exempted?
So, Neha, we need to understand the scheme of taxation under the Income Tax Act. So, the scheme of taxation is, first we need to check anything is income or not. Then we need to see the basis of charge under section 4, then scope of total income under section 5, then residential status under section 6. These all things needs to be checked upon. So if anyone is holding virtual digital asset in his wallet in a foreign country, as you have said, I think, so we need to check if so there are two principles for taxation under the tax laws, under the Indian tax laws. If a person is resident, his global income is taxable in India. If a person is non-resident, only his Indian income is taxable in India. So that is basic principle. So that question shall not arise in the case of resident SSC, since the entire worldwide global income will be taxable in India, is in whether it is an Indian income or a foreign income. So this question arises for a non-resident SSC. So since we need to check whether this income accrues or arise in India, which is in terms of section 9 of the Income Tax Act. Since virtual digital asset is an intangible asset, so it is difficult to determine the situs of that asset. It is very important to determine the situs of that asset, because that will will be the determining factor whether that income will be taxable in India or not. If the situs of that asset is in India, that will be taxable in India. If situs of that asset is not in India, that will not be taxable in the hands of non-resident. Now, to determine the situs of an intangible asset is a very tricky thing. We have a lot of judicial pronouncement which lays down the principles that how to determine the situs in the case of intangible assets. We can borrow the similar principles for the virtual digital asset to determine whether that income accrues or arises in India or not. If that income accrues or arises in India, that shall be taxable in the hands of non-resident under the tax laws. At the same time, we need to check the double taxation avoidance agreements. India has signed the DTAAs with various countries. That needs to be checked. If there is a beneficial provision, that can be availed. If there is no beneficial provision, that cannot be availed. So there are many factors which needs to be checked in this case.
So thank you, Tarun, for clarifying all these points. Our viewers have also raised very good questions, which you have answered very well. And I think it's a very interactive session. So I think we have done with all this. And thank you, Tarun, so much for being with us in today's session.
Thank you, Neha. Thank you, everyone, for being such a patient listener. It was equally a learning session for me as well. Thank you. Thank you so much.
Thank you.